Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about not Apple, but AMC stock. Now, the other day I posted a video about it, really explaining kind of what's going on and my overall opinion about it, and people absolutely bashed me. So in this video, I'm really going to be explaining in detail why I am not buying this stock. And I hope you guys enjoy it. And overall, I hope you guys get something of value out of this video. And here's the thing. I am 100% aware that some of you out there love AMC and you have those diamond hands, but I'm just going to be upfront honest with you. If you want to debate me on it, I will gladly do so. Go ahead and direct message me on Instagram and I'll even talk to you and just give you my overall opinion on this stock. Or you guys can just listen to it, and if you agree, great. If not, I don't know. But all right, so AMC. So when you evaluate a stock, and I'm going to be talking as a more of a long-term investor, and we'll talk about some swing trade opportunities, okay? So as a long-term investor, the very first thing you look at is the trend, okay? So when evaluating the stock here, we're on the 3-year chart. So this whole chart represents the past 3 years of pretty much AMC. All right, so pretty much you can see over the past 3 years, before the whole hype, this thing actually lost about 85% of its value, really all the way here at about $18, lows here at around $1 here and 91 cents. Now, we had all these lockdowns in 2020, which caused AMC to pretty much shut their doors, and they were not profitable, and even before then, they weren't profitable. So a lot of people got on this train, pretty much buying low, shorting, and getting what they call a short squeeze. So pretty much what this is if you have a massive amounts of people that are shorting a stock and you buy up those shares, which cause the stock to go up, what will happen is the people that are shorting the stock will actually have to buy those shares back, which will overall cause a short squeeze. So that's what caused it in here a little bit, but overall mostly in here. It went from $10 all the way up to $72 in about 2 weeks, which is a 609% return, which is definitely outpacing any stock at the time. One of the other stocks out there was GameStop, right? There was this huge craze with GameStop, AMC, and all of that. Then from there, we had this sell-off down to about $30, found some support near it, and we've had a little buying pressure, hit some resistance here, near and around 50, and sold off down to about 37. Okay, so here's my opinion on it. Now, before this huge hype, AMC was losing value, okay? Pre-COVID, pre-lockdown, pre-everything, okay? Now, during the lockdown, AMC had to pay money. They had to keep their business afloat, which made them actually go ahead and get out about $5.5 billion in interest charging debt. So what that means, it's a little bit of an unconventional thing for a business to do, but you have to do it if you're going through a hard time, is you take on debt to get cash into the business to grow it larger. Okay, so people were buying this stock during this time, causing all these short squeezes, but on the flip side, the company was losing billions of dollars. And literally, the thing about it is, even before this, they were not profitable. So now, even in here, they're not profitable at all. There is a couple good things that pretty much has happened with this huge craze of AMC. Is one, they actually sold off some shares to pay part of that off. Not all of it, but they're working on it, which is a step in the right direction, if you ask me. Okay, so this company started paying off, about half of its debt. So there's still about $2 billion in debt for a company that's not profitable and has very little cash. That's not the greatest. But here's the thing, okay? Now, as a long-term approach with AMC is not there for a long-term holding. I think everybody will virtually agree on that, okay? I would rather see you guys invest in the S&P 500 or something like this with this beautiful upward trend, dividends, compound interest, all of that stuff. Or a company like Apple, AAPL, beautiful upward trend, a little more volatility, but still a little bit more growth than the S&P 500. But when you look at AMC, yes, you have this huge spike in growth, but you have to ask yourself, this is more of a volatile stock, right? It went up 600%. It sold off down about 61%, and then went back up another 77%, sold off another 37%. So here's the thing, okay? AMC does carry short-term potential. It does, right? But the thing about it is this thing could easily hit $50 or $60, but before then it could easily hit $20 or $25. The volatility on this is extremely large, especially for a company that is not profitable. That's all I am saying is most people out there that are going to be trying to buy or swing trade this stock right now, because we're in this middle ground zone where it's not overvalued, no undervalued. We missed the train. The train has left the station, so to speak. So yes, you could buy in, but you have to realize it's going to be more of a higher risk investment. And what comes with risk? Reward. So if you're willing to hold out on these massive swings in your portfolio and understanding that there could be better opportunity elsewhere, pretty much due to the fact that if you have money in AMC, you could have money in something else, which could be getting dividends, compounding. So that's all I'm saying is most traders, most investors will lose out on this opportunity. The ones that do hold out, I'm sure will make some money just because of the volatility with that. Not to mention, guys, we're already starting this slow sell-off here. So we might be forming some sort of wedge here, but realistically, we'll probably get some more sell-off down to about 30. And that is where I would look for a swing trade. Right at about $30, right where it's had previous history of support. That is where a good opportunity may lie for getting in on a good price. But for now, I think it's better to hold out, invest in the market, invest in the blue chip and major growth stocks, and wait until this thing is at about $30. How about this? I'll even buy $1,000 or $2,000 and just kind of showing you that it's better to hold out on a stock that is near or around a support line, and we'll try to swing trade this thing and see what happens with it. I just think that right now there's just too much risk involved for most people, guys. So I hope you guys enjoyed it, and I know most of you guys or some of you out there will bash me about some of the stuff I said, but still, guys, many people out there will need to hear this, and I guarantee the time will come and where this thing sells off. It's just a matter of time. It's way overvalued on the fundamental side, and fundamentals always win. So hope you guys enjoyed it, and overall, hope you guys get something of value. We'll see you later. Take care.